Hey, what's going on everyone? It's Casey here again. In today's video, we're going to be breaking down the price action of QQQ on Friday. And overall, it's just a really nice chart, and I think there's a lot of good lessons to be learned here. We also hit a nice trade right here, taking it from level to level for almost 400% to end the day. So I want to go through that exact entry and exit as well. And I want to go through each level and zone that I had on my chart that day and kind of show you where I got them from and why they were even on my chart in the first place, because that's the most important part. This is the kind of information I would always look for starting out. Like when you see someone take a nice trade, I want to know why they entered, like where their stop was, what gave them the confidence to stay in the trade that long, and like why was this level even on your chart in the first place? Where'd you get it from? Saying you took this nice trade off your level, it's pretty much worthless information to me unless I know how to find that level myself. So I'm going to take this video and kind of show you how to do that. Let's start with the levels and zones. This is the 15-minute chart. So coming into here, this was the only information we had. This was Thursday. As you can see, it was a really tight range. And if you watch my last levels and zones video, you know that the previous day's high and low is kind of my go-to levels. Those are the first two I'm putting on my chart. And that's the main area I'm watching for a breakout of. Anything above the previous day's high, I'm looking at going long on the pullbacks. And anything below the previous day's low, I'm looking at shorting the pops. Because this range was so tight on Thursday, I went back an extra day. So this is Wednesday, and I did the same thing. I took the high of the day wick to the following candle body, and I made that my next resistance area. So if we broke out of Thursday's high, I'm looking at 267.45. I'm looking at this zone here as the next resistance area. You can see it right here get respected in pre-market and sell off. That tells you right there that it's a good zone to watch. Because this range is so tight, like I said, if we break out of it, I'm looking at 267 as my next resistance area. This zone here. Now I went back one more day, and that's where I got this 270.16 price target right here. You see we come up, this was Tuesday, we come up, we hit right to 270.16 and we sell off hard. Now what this created was a nice gap in between 267.45 and 270. That's why the price was able to move so freely in between these two resistance levels once it broke, like it did right here. As soon as we got above 267.45, we didn't see one red 15-minute candle all the way up to 270. That was because this sell-off right here kind of cleared this area out. So we sold off, we created resistance here, and then we stayed below it. So that is why I had this 270 level marked as my resistance and this 267.45. Those are my two resistance areas. And of course, the previous day high. That was the main one I'm watching. Above that, I'm looking to go long. I'm watching 267.45 as resistance. If we break that, the next resistance I'm watching is 270.16. This pre-market high level, that was a good area to make a zone off right there. When two big resistance levels like that are so close, it's best to just connect them and make a zone just like that. Look where the price ended, like directly in these resistance areas. If you watch the levels and zones videos, the last one I made, you kind of know like what I'm looking for on these, and those check all the boxes. So coming into Friday, I had 1, 2, 3 resistance areas. Those are the only 3 on my chart. For support, I had the previous day's low, and then I had the pre-market low. I connected the pre-market low level. It was 260. With this right here, you see 259.73. That was another big support level. It came down. That's where it hit. And then we got a nice move up off it. That tells you it's support. So that was my big short trigger for Friday. Like anything below that, I'm looking at only shorting the pops. Below this level would have likely picked up some nice momentum to the downside. So let's take an overall look at the price action on the 15, and then we'll flip to the 2-minute real quick because that's where I take my trades off. So just look what happened here. This is the previous day's high. This is the previous day's low. It's kind of in no man's land if you're in between, but as soon as it broke above the previous day's high, it really picked up some momentum, and that's kind of where the trend starts. It has to break above the previous day's level for a trend to even start. And that's kind of where the momentum picked up, and it was kind of all uphill from here. You see where it hit the first pullback? Right at this zone we made, right there. We touch it almost to a T, and then we pull back, creating this perfect bull flag on the 15-minute chart. The flag breaks. It gives it enough momentum to get through that zone at 267.45. So now, this was where I entered the trade with the 270 price target, because I just showed you why. We basically had no resistance in between 267.45 and 270. So when it broke this and we bought the dip, we were talking about it in the room. We're like, okay, there ain't much resistance to 270. It felt like a stretch at the time, but because there was nothing in between, like, that's just how the stock market works. Stocks move from level to level. Without resistance in between, they'll find their way to the next resistance point. Let's flip to the 2-minute real quick. We also got the EMAs on because I have an EMA system I trade with. And it just helps give confluence to like what I'm seeing. It adds conviction for me. I take all my trades off it. And it's kind of the same thing. I'm not looking at going short unless we're under my EMAs, which kind of adds double confirmation. Like, I'm only looking to go long here. That's where the momentum is. Here's the pre-market high. As it breaks, it gets respected perfectly. Just adds to the bullish thesis that, okay, you're only looking to buy dips today. Like, you're not looking to short any pops. As soon as we break above the previous day's high, we break above the pre-market high, and then we get some nice momentum going. As it breaks above the pre-market high, the previous day high, and pulls back to the 13 EMA, let's see, this is 1048. This was the exact dip we bought on SPY. This was our first trade of the day. It was actually, SPY was above the pre-market high. That's what kind of gave me the confidence to take it. So we took that on SPY and rode it right to this level as well. That was our first trade. It was about 85%. It went really smoothly. But back to QQQ. It breaks the previous day's high. It kind of moves up. Not that smooth yet. You can see it's kind of like, this is hard to trade right here. But after it hits this, it hits our next resistance point and makes this nice flag, like kind of channel pullback. Let me zoom up a little. It breaks out of that, and then it retests the 13 EMA. I really wanted to take this trade. I said I was watching it. I hesitated because there was a possibility that it double topped right here and then sold off. Like, this is a resistance area. We know that. So instead of jumping in here and chancing it, I figured I would just wait for some confirmation and see what happened at this zone. Like when we get a trend forming like this, there's plenty of opportunities. You can just kind of take your time and wait for that confirmation you're looking for. You don't need to really like chase or rush into anything. So as this flag broke, I was watching how it reacted in this zone, and it broke right above it. Now at this point, what you're looking at is a trend. Like one of the most common misconceptions in trading is that trading the trend is easy. Like when you get a nice win on a trend day, everyone's like, yeah, it's easy, it was trending, but that couldn't be further from the case. What I've noticed is most traders are afraid to join the trend because it's hard not to think that we're overextended. Like look at this move up. If you don't have a solid system to trade a trend, you're likely like not catching many of these big moves. You're you're trying to time the top, and you're just trying to short every little dip because you think we're so extended that, okay, now we have to pull back. Like you see a red candle, you're probably getting excited, you're wanting to short that because we're so far up already that appears that the best risk reward would be to short. Like right here, you see a red candle, you're like, okay, we're so high, we must sell off now. Like we've already went up so high. Like you can do that 5 times on a trend and you're gonna lose every trade, but in actuality, the best risk reward is to just join the trend. And you do that, what gives you confidence in that is having these levels. Like I was talking about earlier, breaking above 267.45, like there's no resistance really until this 270 area. So trying to short anything in between this, like it just really isn't that smart. And that's also why I use this EMA system, because it's just another added like conviction for me to join in on the trend and not fight it. My whole system is kind of based around trend trading, buying the pullbacks in a trend. That's where the biggest moves are made, and that's kind of what you want to be doing. So as we broke above this, I bought the first red candle that pulled back to the 13 EMA. That was this one right here. I entered right here on this red candle as it pulled back, and I set a 12% stop loss. That's how tight it was on a 0-day contract. The reason for that is because we're in an uptrend. If we broke below the 13 EMA, I didn't even want to be in the trade anymore. I would have likely looked for a dip buy to the 48 EMA. So that's why you can set a tight stop loss in those situations. Like, because even I who love to trade the trends is thinking like, dang, we're pretty overextended. But I mean, everything's telling me that we're in a trend and it's going to continue. We're breaking levels. The EMAs are smooth. Like my whole system is telling me that we're in an uptrend and we're going to see more. My brain is telling me the same thing as everyone else. Like, dang, we're overextended. This was a big move up. But my system is telling me, like, enter this trade long and ride out the 13 EMA. So that's what I did. I entered right here. I set my stop loss. I said I'm going to ride out the 13 EMA as far as it takes me. Now, to be safe and be smart, of course, I'm selling on the pops and I'm scaling out. But I'm also re-adding on the dips. Now this can be scary and hard to get used to at first if you're not used to trading the trend or like having a system. But for me, I know how well this 13 EMA is respected in a trend. So I'm selling these overextended pops and I'm re-adding on these dips, basically until the 13 EMA breaks. And I'm just letting it ride. I'm entering here. I said I'm holding until the 13 EMA breaks. Hopefully all the way up to our 270 zone, which is exactly what we saw. like it didn't have to work out that smooth. The market can do whatever it wants. Like I have no idea what it's going to do. It could have easily reversed right here. But for the most part, the levels and zones are on point most of the time. The EMA system usually does its job. It's on point most of the time. Like you have to trust your system. You have your stop loss in place in case it doesn't work out. But for the most part, like when I see a trend like this, I'm joining it. I'm buying the red candles back to the 13 EMA. So long story short, that was basically the like my overall day of trading. I was watching QQQ all day. I hesitated on this one. I waited for some confirmation. I got it as it pushed through this zone showing strength. So I jumped in on the pullback. Like, that's what trading comes down to. You got to trust your system. You got to go with the trend. You got to go with the flow and not fight it. Like, you could have tried to short this so many times and got crushed, but you got to have a system for the trending days. And mine is this. I watch my levels and zones to break, and then I buy pullbacks to my EMAs. I'm trying to think if I should cover anything else, but I think this video is getting kind of long and I don't want to just drag it on. So I think I'm going to wrap it up here. I hope I covered some valid points here. But if not, just maybe leave a message in the comment of anything I missed. Yeah, I think that's it, guys. All right. Thanks for watching. I'll make another one soon.